Hey everybody, and welcome along to Trader Talk Radio, the original show for today. Today, the 23rd of May 2021. My name is Paul Bott from the founder of Actions to Wealth, and it is my great pleasure to have you along with us today. I'll be joined by the team as they come in today. We've got Julian, Alexis, Ainslie, Sukri, all due to come and share a little bit about their view on the markets today, joined by Geoff as well, as my understanding. Normally at this stage we would have Julian in, but he may be having an extended break. He's just finished his 2-hour macro overview. If you guys had a chance to have a look at the macro overview and you've got some feedback for us and you're in this session, I'd appreciate if you could punch that into a group. I can just see Julian signing as we speak. So we'll go to Julian in a couple of minutes and then on to Alexis. As I said, if you've got any feedback on the earlier session with Julian, I'd appreciate if you can put it in the chat. It's always good to see what you guys think of the stuff that we do and what you guys are learning from it. It's obviously all about that. Julian, how are you, mate?
Hey, Paul, a little hoarse.
Mate, I'm not surprised. How was it, mate? I'm afraid my kids didn't go to sleep very well tonight. I've been away. I only got sort of back and I didn't really want to go to sleep. So how was it?
Well, I enjoyed it. I hope everybody else did too. So it's always nice for me to have a quick scoop around the markets and also cover some fundamental aspects of trading as well too. So we sort of we had a good macro overview. For those of you that didn't manage to take part in it, then I think you missed a good session, and maybe there's a recording that you can catch up on later. But yeah, look, I'm really happy to maybe summarize a little bit about what I was saying at the end of the conversation. I think I'll try and make it super quick because I've only got a few minutes, and we're not going to show many charts this time. What I'm going to do is I'll just share a few slides with you. Well, not even a few slides. I'm just going to start with just one or two slides, I think, around what's going on. So let me just get straight into this. Could you just allow me to see that, have the screen, Paul?
Mai, can you do that? I think Mai is the host of this one and she has to give us all the powers. Mike, can you give us all the powers, please? There you go. I think your co-host now, Julian, should be able to share screen.
Great. Okay, folks, that's it. So yeah, right. Let's get straight into this, and hopefully, come on, clicking buttons, and I'll click through all of this stuff. Apologies for this. This is there we go. That's what I talked about. So I hope that's pretty clear to everybody. Let's go with the end slide, and I'll start there. Hopefully, you guys can see that. Let's just run with that one. I think which is probably easiest. So look, hopefully you can. Maybe if I just press share, that will probably help.
Can make a difference.
Okay, hopefully everybody can see that last slide that I've got up there. So look, my basic contention here is that I'm not entirely sure that inflation is going to be anything other than transitory. The reason why I say that is a number of reasons. The three key areas that we have to think about are the pandemic, fiscal spending, and also the supply chain bottlenecks that we're seeing pretty much in every part of the world. So when I think about each of those, I believe that fiscal spending is probably topping out a bit quicker than people think at the moment. I don't think the Biden government can continue to issue checks to people who don't necessarily need it. We know only 1/3 of those checks are actually being used for consumption. The rest are either being plonked into to pay down debt or else to put into the stock market. If that does come to an end, then obviously there'll be a big liquidity wave, which won't be going into stocks, and that's got to have an implication, because at some point, markets don't go down because there's suddenly a whole heap of extra sellers. They actually go down sometimes because there's a lack of buyers, and my worry here is that there's going to be a lack of buyers in that US stock market. The timing cycles look right, and for those of you that have been following Gordon, he's obviously been banging the table about this, and I have a lot of time for the timing cycles, so we could see some rough weather for the next few weeks and months in the stock market. There will be a time to buy, but I'm just not sure it's going to be for a little bit of time. How does that affect other markets? Well, given that over 90% of people believe bonds are going to be over 10-year bond yields in the US are going to be over 2%. By the end of the year, that's a pretty bearish lot. I would imagine that most of those people are either not invested in bonds or they have short positions in bonds. Well, in the world of who is left therefore to sell them, it wouldn't take a reach to say that there's actually nobody really left to sell them, maybe apart from the Treasury. So what may happen here is that we could easily see those bond yields either stabilizing or falling, simply because everybody is on one side of the boat, and they're on the wrong side of the boat. So traditionally, inflation tends to subside in the second half of the year. That would coincide, very interestingly, with a rally in bonds, and especially if you look at the 30-year bond, there's a duration asset play there that could make you about 20% if you held it over the course of the next 6 to 9 months. And inflation did indeed subside, and bond yields fell back towards the 1.25%, 1.20% for the 10-year, and possibly the 170, 160 for the 30-year bond. By the way, for the record, often tech stocks are long duration assets as well too. For those of you that don't know what that means, please go look up duration in financial assets on Google. I haven't quite got time to explain it, but tech stocks are often seen as a long duration asset, and I would imagine they will outperform, you heard it here first, outperform value stocks in the course of the next 6 months. So there's an asset class there that I think is quite interesting, but it's only going to happen, right, if the spending slows down, if the supply chain situations are seen as being transitory and resolve themselves. When you look at the exports from Taiwan and from South Korea over the course of the last 3 months, that transitory nature probably isn't a bad discussion, because their exports have simply gone off the charts upwards. They burst out the top of everybody's charts. Okay, so they are exporting as much as they can. There's a reason why all those ships are waiting outside of Long Beach. It used to be because everybody had COVID and there was nobody to unload it. Now it's just a wave of product that's trying to reach American shores. It wouldn't be a reach to say that as that wave of product hits there, prices will stabilize in some of those commodity markets. So, you've got to judge this with the fact that overall equity valuations look high. And if inflation starts to come down, do they look high then? Well, with negative 4% or 4% negative real yields, then, it's really hard to sell equities. At -3 or -2, is it still really hard to sell equities? I believe so. So is there really a bear case for equities here? Probably not. But equally, there's nothing wrong with them falling back 10 to 20%, and in a corrective phase that would be quite normal, quite reasonable. They are pretty expensive right now and washes a few people out who are weak holders. That, by the way, is not a bear market. And it's not unreasonable to see that happening. But that's a long way. That's like losing 400 points in the S&P, which right now would appear to give it a heart attack. So bear that in mind. Hey, look, volatility is way too low in FX, I think, for some of the disruptions that are going on. I think the European market is in a different place to the US, which is certainly a different place to Asia. There's no other way of putting that. And I think that's going to be reflected in volatility in the FX markets. You could argue that the Aussie dollar is too cheap. You could argue actually it's too expensive. So there's arguments for both cases. Probably the reason why it's gone sideways for 3 months and continuing to go sideways. I believe there's a bear case coming on for the Aussie at the moment. Maybe the US dollar strengthens a little bit over the course of the next few weeks. That's my sort of play at the moment on a micro level from a trading perspective. You've seen that in my broadcast group. We'll see how that plays out. But a lot of that is, honestly, come on, Canadian dollar's gone from 140 something down to 120 in a straight line for the last 6 to 9 months, pretty much tracking the commodity market. Nobody in their right mind would be long of Canadian dollars right now. So everybody is short of it. There is one side of the boat that is absolutely overpopulated. Will this be the low? I'd love it to be, because then my trade would work, but I suspect I might have to have a couple of bites at the cherry. So we'll see how we get on with that. And but the low is probably coming at some point in time, sooner or later, sometime in the next month or so, who knows. But that really depends on what happens to those commodity markets, and I've left them till last mainly because, let me show you one chart that I think makes a bit of sense to me. Let me just see where I've got it. Where is my commodity chart that I need to show you guys, because it's hopefully a little interesting. Oh no, I can't find it. There's nothing worse than, here we go. This is the speculative long positions in some of the commodities. Now listen, sometimes their speculative long positions are out there and all the time. Please ignore the one in coffee, because that is giving me a painful headache right now, because I'm long of coffee and therefore in the fragile position of being the most over-owned speculative long position in the market right now, which is entertaining. But you can see, you get the gist, right? You look at this, pretty much everybody's got this stuff. And as I was saying in my talk right now, a lot of these are trading well above, I mean, like a long way above marginal cost, right? What it costs to make this stuff. They have been driven up by financial positioning. Equally, they can be driven down by financial deleveraging. So what will cause that to happen is the inflation argument going away. So just be on your game that that's a risk, right? I'm not saying it's going to happen. I'm just saying it's a risk. So there really is my scoot around the world. The other thing I guess I ought to mention, because crypto is pretty important, the only thing I will say about it is I still have no idea where it's going. There's some value in Bitcoin in the low 30s and high 20s, I think, just for a trading position. Same in Ethereum around the 1800 to 2200 mark. That sort of makes sense as a bounce point before we have a rally. I don't think that's a surprise to anybody. It's about the halfway point pretty much for most of those markets, or a 618 retracement in the case of Bitcoin. But what really is important to me is volatility there is too high. It's really hard to build a bull market off a 10% to in one case, I think one day last week we had a 25% move in that market. Come on, you can't build positions in any type of commodity or market or equity with a 25% move in a day. That's just completely nuts. It can't be true, can't happen, and therefore we need that volatility to unwind, and then people will build a more longer term enduring position in the cryptocurrencies. Paul, that's it for me. Thank you very much, everybody, for listening.
Cheers, Julian. Enjoy a well overdue rest. Thank you very much for your couple of hours today and for coming back and doing another summary for us tonight, mate. It's much appreciated. Always fascinating stuff. So enjoy a break, mate. Thank you very much. And we will head to Alexis to talk fundamentals. Alexi, are you ready?
Yes. Hi, Paul. Yeah, okay. So I'm just going to give a quick share of my screen. And I think interestingly enough, I was having a look at bonds as well, because I think recently there was a, there was a big demand for bonds from China, right? So I have been so-called watching or following the China news, China markets, just to see where things are at. Just let me pull out that article, which I have no idea where it went. Yeah, but before that article, I'm just going to put out a PowerPoint slide. This is just some curious toggling after one of Julian's sessions regarding bonds. So I think bonds are something that I am paying a lot of attention to now, because it is, I think, as Julian mentioned, cheap. Prices are pretty low. It's, prices have dropped from quite a bit. Yields are changing. They're no longer the same as years before. So this is the article I was looking at, right? Overseas investors are snapping up mainland China bonds. So this got me curious on what's happening in the bond market. And if we look at a couple of, I would say, let me just move this. I would say a couple of bond charts. Let me pull them out. So I've got a couple of bond charts here. I just pulled them off the trading view. So let's just take a look. Like what I'm showing now, it's the prices, bond prices on the 5-year, 10-year. This is a China 5-year price for bond prices. This is like the 10-year price. All right, it's just interesting to see that the bond prices have jumped, right? I think 10 years is a little bit easier to see in terms of charts. So you can see 2021 in May itself, the most recent price action, you can see a big jump, in the entire month of March all the way to May, bond prices have been going up. Now, in comparison to that, these are the bond yields. Bond yields are inversely related to bond prices. They are going down, so it's a very normal price reaction, but it got me curious on the bond prices and the yields in the US, in Australia, and a couple of the other markets that we're looking at. So my question then is the flow of money. Will the flow of money go back to, where will the flow of money go next? So this was a comparison I did earlier on between a Aussie and a USD. This is between a Australian 5-year, an Australian, I think 5-year and a US 10-year yield. It's just playing around with charts to see whether the bond yield differentials do make any difference. So when we start talking about bond yields and whether or not how that translates into trading currency, I think Julian mentioned as well that there is potential of the US dollar strengthening. I have mixed feelings about that, because I think as much as I would like to see more US dollar strength, I have been waiting for positions in the US dollar, but I don't think it will happen that soon yet until something changes. So I think the patience game here is really interesting. I'm going to scroll through a couple of dollar charts, and you can see the dollars are really cheap right now. And I think a lot of things play into fact right now. It's not just, I would say, the market has gone a lot bigger. It's not just about bonds, interest rates right now. I think crypto, the massive movements in crypto in the stock markets, it's all going to shake up the US dollar and kind of give it an effect. So curiously enough, I had someone, I think I can't remember, but I was out with a couple of friends and someone asked me, why would anyone buy Bitcoin, right? And I do understand where that concept is coming from, because the general, I would say, news, rumors, or like myths around is that crypto is not regulated. It can't be used for anything and stuff like that. But the question then I asked my friend was, how do you determine that money is money, right? It's just a piece of paper. And he quickly replied, oh, it's because money can be spent. So that was when I said, hey, actually, Bitcoin can be spent too, right? It really depends on the platforms. And now that banks are coming in, regulatory bodies are looking at it. So in a way, Bitcoin, does it have the potential to become money? And that's the question mark, right? And if that happens, what will happen to our traditional fiat currencies? So a couple of things happening in the Bitcoin world. Now, I don't quite understand Bitcoin as a trading asset, so there's a lot of things to learn from Shukri, but what I do understand about money is this. Money is money because money is used, it's got a demand for it, can be spent. So the more regulatory bodies that are coming in to support this acceptance of Bitcoin, acceptance of Ethereum, then this asset class has a potential of becoming some kind of in exchange, right? Money is an exchange system. I give you a piece of paper, you give me some stuff. That's it. All right. And based on what the China regulators are doing, is China cracking down on it because they feel that cryptocurrency is a threat to their actual global currency? I don't know where they're going to come from, but there must be a reason why they're cracking down on mining. I don't think it's just because it's for the environment. So I think a lot of things is happening, not just in stocks or bonds, but I think if we take a couple of steps back and look at the macro view, we have this big chunk of asset class, Bitcoin, where it has so much attention recently. We have bonds that are so cheap now. Are people going to come in and purchase those bonds? We have people going into China bonds. China is now number 2 in the global economy, right? It's ranked number 2 in terms of GDP. It's been really quiet recently. And if we do look at the China news, I think China is just being quiet because they are focused very much on the vaccines that are happening in their country. The moment they settle their vaccines, I think something's going to come up from there. So where do I see us trading in the next medium term to short term? I think an eye on the USD is going to be a question mark in terms of, let's see what the US dollar, how the US dollar will respond. Politically, they're pretty much, I wouldn't say stable, but I would say politically, Biden is not as erratic as Trump. He has a very clear direction. He doesn't change and U-turn as and when he feels like it. So what I'm looking for is now is a trading signal, right? Signal on whether or not the USD will continue to have this decline towards the downside, right? Or will the USD start to recover? So my question is, on a lot of these charts, and one of the pairs that I look at always is the USD Sing dollars. And on the daily chart, the USD Sing dollar is consolidating again at I would say, the area of regulatory intervention. All right. So my question then is, will the USD Sing break below this, bring it down further, or will it pop back up? So a lot of consolidation happening right now. You can see the dollar Sing is still sideways, been sideways for ages, all the way this year. Dollar Swiss has come off again, testing this area. Will it continue breaking down? Question mark. And based on the news that's coming out, based on the bond market situations, based on stocks, I think whatever is happening in the stock market, there are two things that will happen. People would have a flight from stocks because they want to take profits and sit on the cash. And by saying sitting on the cash, I'm talking about hedge fund managers thinking, with the stock market doing this now, where do I want to put my money? What's the safest? It's either bonds or cash, right? Do I want to hold the cash and sit it out, hold the cash and wait it out, or put my money in bonds and wait it out? So I think that in this 1 or 2 weeks, it's going to be interesting because decisions have to be made. Where does all these millions and millions of dollars in terms of hedge fund manager portfolio going to go? Are they going to go into bonds? Are they going to go into a cash asset while waiting for the stock market to give it a cleaner signal or something like that? So my eye is on the US dollar. It's either going to pop down, but when it does rally back up, I think the move will be really fast, because that will signal the start of all the other buying power that's coming in. So my eyes on the USD for the next couple of weeks right now. That's all for me.
Cheers, Alexis. Thank you very much for that. Always good to get your view on the market. And it is an interesting stage in the market, isn't it? There does seem to be a lot of stuff in play, and certainly interesting. Gordon called Friday last week, Friday the week before, was doomsday for the stocks. But boy, he got the crypto market right, didn't he? What we thought maybe came in the stock market certainly came in crypto pretty quickly after that. It'll be interesting to see if stock markets do have a little look and follow it at some point. Next up, we have got Ainslie. We're going to be looking at the golden edge with Ainslie. Before we do, can I remind you, we've got a couple of things coming up in the next couple of weeks that are well worth keeping in your calendar. On the 5th of June, we'll be doing Learn to Trade Crypto, a new course where we teach you how to trade crypto as opposed to own it. And on the 6th of June, we're doing a Welcome Back to Trading program where we're going to invite people who've had a bit of a break. And people just want to have a look at this new Wave Rider. Lots of excitement about that strategy. We're going to put them onto one event on Sunday the 6th of June, do a recap on the new Wave Rider and sort of do some welcome back stuff for people who've had a break from trading. So keep those dates in your calendar. Next up for us is Ainslie and Gold. Ainslie, you with us?
Hi, how are you, Paul?
I'm good, thank you. How are you?
I'm very well. Happy Sunday, as we say.
Yeah, been a nice pop-up, hasn't it?
It's been, as we described, we expected a pop-up and then we expected to go sideways. So gold this last week has resembled something like a pinball where it's shot up, come back down. Drag sideways, gone up, come back down. Gone up, come back down, and gone sideways. It's been fabulous. But what it hasn't done a screaming 30% drop like other financial assets I could name, like Bitcoin, for example. We didn't have any of that. No. We had a really good move up at the beginning of the week. And I think what we're going to see here with the fallout, and Julian's touched on it, Alexis has also touched on it. China announced this morning that they're going to crack down. The Chinese authorities are cracking down on cryptocurrency as far as preventing people from holding it. Sorry, not from holding it, but from they're going to ban people going into the coin releases and the coin offerings and things like that. They will not ban people holding it individually. We've also got the equity shakeout. We've also got, as Alexis pointed out, we've got people saying, well, let's sell off the stocks. Let's see where we're going with, we're putting money into cash, but putting money into to bonds, but the yields aren't so great. I think we're going to see, as a third alternative, people putting money back into the good old shiny stuff that has actually held on for, I don't know, a couple of thousand years. But apart from that, this week you can see gold's actually really, you can see the movement on the 4-hourly chart, which is giving me heartburn, by the way, has really moved around with announcements and with bits and pieces happening in the market. And look, it's not the lovely straight up move that we saw and that we had at the end of last year or in last year. You can see this in this area here, but on the weekly chart, you can see that we've broken out of this bull flag, this channel, and I put this on and I counted it up. It was 11 weeks ago. I've just had this sitting here, just had this bull flag sitting here on my weekly chart because I was trying to work out what's going to happen with it after we had the double bottom and then we had the lower high and then we've moved in, and it's just moved up and moved up very slowly. It's crossed well, it didn't cross, it actually went blisteringly through the 200 simple moving average. But this week we've had, with all the news that's been out and all the fundamentals and everything else that's been happening in all the other markets, it's sort of like going, oh, we're good. No, we're not. We're good. No, we're not. It's argued with itself. As you can see on the 4-hourly chart, gold has argued with itself all week. And we did have that lovely move up initially, but as we thought, we'd just have this consolidation. Now, where will we have a bit of a pullback? Because, you know, gold likes to check levels and all the rest of it. But I think with everything that's happening and people pulling money out of everywhere, gold being that reserve currency, and I know we're looking at bond yields going up a little bit further, but I think it's going to take advantage of the fact that as people pull money out of equities and other bits and pieces, and just not knowing what's happening with the FX market per se, we're going, and even the commodities, other commodities that we've looked at, people might actually use gold as a bit of a hedge, as a bit of a store, as a bit of a offset with everything else that's going on at the moment, because it's been a little rugged if you've been having money in faster moving financial assets. So it is possible that is going to hold true. We had a really nice, you know, this last bar, it's now 2 weeks ago, you know, the push up there that we had on that bar was indicating that we're going to go north. We have gone north. We're just holding at the moment. So I expect a bit more consolidation coming in for this week, because the market's really going to sift itself out for the next week or so, I would say, and especially coming into the end of the month. So options expiring, all that kind of jazz happening. We're coming into the end of the month. It always happens like that. There'll be a bit of a shakeout. We've had a wild week as far as no direction. We've just had a lot of sideways movement, and that's cool. That's okay. We expected that after a strong move up. And then let's see what happens after that, because I think because we've broken this channel, I know I said I would really like to see that to go straight to 3,000 in an upward line. I know I said that. I don't think we're quite going to get it, but let's hang in there, guys.
Cheers, Ainslie. Thank you very mumuch for that. Much appreciated. We'll come back to you and talk oil in a few minutes. Next up, we have got Sukri to talk cryptocurrency. In the gap later on between Lloyd and Geoff today, I'm going to talk a little bit about the doomsday and the predictions that Gordon made, and something that could be affecting the dates of that. And I'll see if I can get a chart ready for that and run it through for you guys. So do hang around. I'll give you some possibilities, not some definites, because this is trading. But look, great to see so many of you in the room today. Nice to have your company. Sukri, are you with us?
Yes, and it's doomsday indeed.
Oh, mate, doomsday was on the crypto market, wasn't it, mate?
Totally.
My understanding from having a look earlier is that she still ain't going up. What are we now, 34,270?
Yeah.
Still a bit on the right side. Not the disaster it was, sort of late Thursday, but been a rough week for crypto.
Very, and I'll tell you why. Okay, this is good. You know, Julian mentioned that was much volatility, so this has gone to extreme fear, which is good, because last month it was greed, which is never good. So a lot of air has been let out. Now, where is the bottom? We don't know, but here is a very important chart that shows to you the fear and greed index. So when it goes down here, which is extreme fear. And look at this. This is the last one, right? This is 25th March 2020. This is today. So look at this, how long it stayed in extreme fear. So that's why I said now is not the time to do anything, because I think it's going to stay down here, because here is what happened. Now, if we look at all that, where the bottom was, where it hit the extreme fear.
Sorry, you might just take us back to your fear and greed thing.
Yeah, it's basically this. When people
are...
Okay,
how do you measure fear and greed on crypto?
It's like leverage. The simplest thing is leverage. When people take leverage, they are very, very greedy, and that drives up the funding costs. And that goes down. And of course, then you have liquidations. Now, let me tell you the problem with last week. So I did I mention it in the show that I said it was quite weird that there was not enough liquidation because there was already liquidations here. So maybe people deleverage and then they leverage again. And this bar caught everyone, almost everyone off guard because 800,000 accounts were blown away. That means they become zero. You know, they went from whatever they went to zero. That's the problem with leverage trading. And I still, if you are going to leverage trading, you really have to be careful because here's the deal. In some accounts, you could not even get into your account. So you must have everything set up. If you do not have everything set up, anything can happen. You know, your stop losses or whatever.
So, let me ask you about this, Shukri. I like to make sure I make this really clear for the people watching. And this is kind of new to me, so it always a good chance for me to ask you some questions. But so what you're saying is the guys that have got some crypto in a wallet somewhere, they can't get liquidated because it's still worth $30,000 for God's sake. It's still worth some money, right?
Yeah.
But guys who had money in eToro, Fusion, except these kind of guys with a leverage, 800,000 of those accounts. The Robin Hood boys, got a little look at reality. They understood. The Robin Hood guys will be better traders for this experience because they've just learned a little bit about trading that they can do, right?
Correct, Paul. Totally cleaned out. Now, 800,000 is a big number, and that's why it's going to take time to kind of like, okay, I can say this is the bottom. Doesn't matter. It's going to take time for things to recover. I'm looking at mid-June, end of June. Because I just can't, you know, if it goes up, some people will let go of half the position, even if they're believers. This is a fact because people just want to be protected. Now the question is, what happened to my eToro account that you saw at 521% last week?
And I'm going to ask you another question. Before you show us how good you are at shorts, and I know you smashed it because you're a clever little guy. You are a clever man. But so what you're telling me is the selling included 800,000 accounts being force sold.
Yes.
So they're hitting margin and it's just going sell it.
Yes.
So a huge amount of the selling is just really a part of the lack of institutional structure in Bitcoin, where these things are allowed to happen without quite the same level of control as in perhaps the stock market with a cutout, and these things don't happen quite so much, right? So interesting. So you think that the leveraged accounts got the guys hurt, right?
Yes, and here's the thing, Paul. Just imagine if you had a leverage account, you couldn't even go into the account. Some accounts you couldn't even go in. You just couldn't access. The traffic was too huge. This has not happened once, okay? So the guys who were burned out on leverage, I'm sorry, but I want to tell you, this has happened so many times. Why were you on leverage in the first place? That's
so rule number one of crypto: stay out of the leverage. It's too volatile in the first place. What are you doing leverage trading something that crashes 25% a day, right?
Correct. Don't do that, because if you don't stay out of, let's look at it on perspective. Like I had a rule that, you know, I was my maximum drawdown in my portfolio was -20. And here's the result. I finally took the profit out after like 5.5 months. It's 421% up. That's the situation. And that's it. So this hit -18.77. So we were still in, and it went up here, and this hit it was beyond. I got out at -16. The only thing I'll change here next time is I will base it on the ATH instead of the daily close, then I would have gotten more. But this account is already in US dollars. Guys, this has no leverage. I don't know why people need leverage. You really don't.
Yeah, you've made 420% with no leverage and no possibility of going to zero.
No possibility of going to zero. So
unless Bitcoin goes to zero.
Unless Bitcoin goes to zero.
So what you're saying is you can just make ridiculous money without taking stupid risks.
Yes, don't even take a risk, because it becomes stupid for one day. You know, because you're overconfident.
If there's someone listening to this who got cleaned out, I'm sorry if we sound a bit frivolous about it, because we're really not. We're all traders, and we'll face these risks, and we really understand. But I think, look, over the weekend I was away with some friends playing golf, and people just asked me time after time after time about crypto, and I told them, this is my opinion. If you want to trade this stuff, you study it full time for 3 months and then you trade it, or you get a team of 10 of your friends who can trade it, who can study it together for weeks, and then you trade it. But this has changed. This is not just amateurs throwing money at the market anymore, because amateurs throwing money at the market in this now are getting found out. And that's all that's just happened here. All that's just happened here is the amateurs have been found out. And honestly, my heart goes out to them, because it's always the amateurs that get smashed. In the end, you know, they're always ones that hurt. But there'll be some great lessons for those that want to become good at this with a bit of time for this. Back to you, mate. I don't interrupt you.
And it's cruel, you know, because on May 12th, you got 10 billion liquidations. So we thought that was over, right? And then suddenly it happens again, another 8 billion. That's cruel, you know, that is crypto. But look at this. This account is still, look at the perspective. This account has gone up 5 times. Look at that. So that's, please no leverage, guys. You don't need to now. The other good thing is this now. I trade this on the most boring cryptocurrencies ever. These are the old coins, and look what happened. And this is why my target for this account is now 1,000% by the end of the year. So come to the trading class. I tell you why. Don't believe me. I'll tell you why. I'll show you this simple chart. One of the charts that I did going up was Dash. Paul, look at this. It's come back to this range, to Geoff's famous range. So I know the numbers within this range. It hasn't gone up to the all-time high. I have something measurable. If you are going to a new crypto, you do not know where you're going. You have no idea. So this is something that's kind of good for me. I'm familiar with that number. I knew what I was doing here. I know the resistance. I know the support. So I'm just waiting for things to calm down first. Don't do anything. And if you look at all the things I'm trading, I'll tell you, like Dash, Litecoin, Neo. If you look at YouTube, guys, nobody covers this. These are the most boring things in the world. So in these times, the boring stuff works, no leverage, you're okay.
Yeah, look, I just think it's one of those things, Shukri, you know, people, it's easy. People get on, and you're a great example. You get on, you talk about crypto, and you get excited, and it flows along, and there's this and that. Don't miss the really important stuff, guys. If you're trading this stuff, don't trade it on a leveraged Forex account. You know, and if you do, look, I traded this on, in fact, thanks to Gordon, actually, I bought Bitcoin on Fusion at 32,000. I sold it at 58,000. I sold it because of the doomsday stuff from him. But I did it at, you know, even on my real accounts, I do it at very small risk, because it is leveraged, you know, and I know the risk. And if you're going to carry a product through a weekend that you can't exit, that's what's happening on a retail broker. There's no way out. You're going to wake up Monday morning. You could be happy. You could be very, very sad. You've got to be really cautious. And this is experience people are learning right now. And, you know, I'm not sure I agree with you, Shukri. You say it'll be doing before it recovers, but that depends on something. Yeah. That depends on whether there was a seller here who knew there was 800,000 accounts to liquidate, and he's just rolled them out, and he's going to buy it down here. And whether there's some of the big guys here have targeted these guys, and if they have, they'll be in Monday, Tuesday buying it. Yes. Now, I'll tell you in a few minutes why I think they might not be in buying it, but this we're going to add to the list. But yeah, if it really is, if someone's had a run at the amateurs, then the person who had a run at the amateurs, the professional, he'll be in at some stage looking to buy at these levels.
Yes. And here's one thing. Okay, guys, I have said this numerous times, already mentioned. I did sold some of my cryptos, you know, to pay this thing, again, by the way, although I still sold it to pay future tax. Look, Janet Yellen has already said that any $10,000 transfer of cryptos needs to be reported to her. So you and I know that every single government in the country is going to start taxing us. I know it's hurting, guys. I know we got, you know, some of us got blown away and stuff, and now they're coming to us for tax. That's life, guys.
You know, the best part of this, Shukri, for the governments?
Yeah.
All those Robin Hood boys that got smashed on Thursday and Friday lost their accounts.
Yeah.
They'll have paid tax last quarter on how much they were up.
That's right.
They won't be getting a rebate from the government on what they just lost. There'll be The governments, all of a sudden, the government's becoming the world's biggest crypto fans, I'd have a feeling. They have made some money out of crypto in the last few months. Mate, is that you for the cross?
Yeah.
Cheers, mate. Thank you very much. I'll have a chat with you tomorrow if that's okay. We do have some stuff to talk about.
Don't do it. And again, lesson is the old things work, okay? The boring cryptos work. Guys, please, I've told, you know, I know I sound like a broken record, but I will say again, no leverage, no leverage, no leverage. You should be okay.
Yeah, I think That's a really good point, Shukri. I'm pleased we made it. It's one of the things we want to be doing is, we're a financial education company. We want to give people good financial advice. So thank you for that. Ainsley, what about oil? I think it actually went over stop loss.
Huh?
I was away. At least I looked at my account, and unless I couldn't see a trade on there, I think I actually got stopped in that little pullback.
Oh, oil. Well, there were some interesting meetings during the week, Paul. Some really interesting meetings, and it involved the International Energy Agency, IEA, and Iran, and oil, and yeah, it went south really quickly. One of the reasons that we've got this bounce back up, just to give you a bit of a brief background, is IEA, the International Energy Agency. There was a meeting in midweek in Belgium. It's in Belgium, and we had everything to do with what was going on with Iran coming back into the whole deal. Now, Iran has had sanctions against them, US sanctions, since 2015 because of a breach of the nuclear pact that they had when they were invaded and all the rest of it. It was all very ugly, and the US have been trying to work through. Now, that aside, the US and Iran are working through the whole nuclear deal, and they are close to an agreement there. However, what we had here is the IEA saying that post 2021, which is this year, no new oil, gas, and coal projects, which doesn't really suit a lot of the OPEC countries. The OPEC countries have now rejected that whole IEA. As you could imagine, they're not very happy about being told no new oil, gas, or coal projects. Go figure, because OPEC is, at the end of the day, the Organization of Petroleum Exporting Countries. So it is in their interest to sort of like get that oil thing up and happening and promoted and all the rest of it. But the IEA had different ideas. The whole thing, it just sort of really exploded. As you can see here on the charts, it just went down. Where we had the recovery was and this is on Friday, by the way, it just had the whole hold the phone. We're not subscribing to this whole thought process. We're going to go. We're still doing it. Oh, and by the way, in the middle of all of that, Iran decided that they would announce that they're going to actually increase their level of pumping oil as well. So that was the whole fear of the market being flooded again. So we did have this massive pullback, 3-day pullback. As you can see on the daily chart, it just came flying back down. Yeah, it was unfortunate, as I said, and I keep saying, you've got to be really careful with oil because the fundamentals are really acute in this commodity. So as soon as somebody says something, there is a massive reaction here. And unfortunately, that's what we had. That's what we saw. We're trying to decipher it is one thing altogether. OPEC, as I said, have now rejected the IEA, saying, no, sorry, we're going to actually keep pumping in line with what we're doing because people still need oil. And whilst we are transitioning into this green, lovely community of no fossil fuels, of no coal, of no oil or gas, we still need to operate and function. So they're saying we do still have a product that still needs to be used and utilized. And that's what is happening here. Is still a bit of more, well, there's still a bit more leg to it, more to come. But yeah, we did have this massive pullback, which was not what we were expecting quite so much. Technically, charts wise, we've got this huge on the daily, a bullish engulfing candle. Do I expect it to bounce off that? Yes, I do. Let's see how we go. We've got this level down in here at 61.74. call it 61.75 because, you know, it did actually give me a heartburn, but that's okay. It's what happens sometimes. But I have said repeatedly, be careful of the fundamentals, watch the fundamentals. You have to be across the fundamentals on oil. It's not one of the commodities that you can afford to just say, I don't watch the news, I don't listen to the news. You cannot do that with this commodity at all. It is fundamentally based. It goes from what people say and the sentiment, and it moves and flicks around, as you can see, huge amounts. So I hope if anybody was trading especially after that shooting star early in the week, that you were able to cover yourself. But that's the name of the game, is just being across this very volatile commodity at the moment. And it's just, I think it's going to remain that way for some time. Thanks, Paul.
Cheers, Ainslie. News leads the oil all the time, doesn't it? You really do have to know your people and your stuff, and it is. I mean, at the end of the day, it's a commodity. It is fundamentally driven, supply and demand.
Fundamentally, absolutely.
Uncertainty, these kind of things play a huge part in it, right?
Huge.
Thank you for that, Ainslie. Much appreciated. Looks like a lovely evening in Sydney there. I know that's really only a picture. How is Sydney this evening? Is it beautiful?
It's been beautiful today. Absolutely gorgeous. So we've been very lucky. It's meant to be winter in a couple of weeks, actually. And I'm just like, yeah, really? Somebody better tell the tomorrow.
I'm the same. Winter for you starts in June. I'm going to say in New Zealand it's a little bit different to that.
Yeah, no, beautiful weather. So, but not over the top. But yeah, no, very nice evening here in Sydney. So all the best.
Cheers, Ainslie. Thank you for that. And we'll welcome back Lloyd next. We're going to talk about currency strength, if you like. We're going to have a look at, there's the dollar index. Lloyd's going to look at currencies from the point of view of each currency's index and see how that will go. Lloyd, been a busy few weeks for you with some of the testing we've been doing. How's the trading gone during that time?
Hi, Paul. Evening, everyone. Trading still is steady and normal. Nothing exceptional, which is how the way I like it.
Yes, mate. Fair enough.
Yeah. So let's have a look at the currency index. I think I missed out last week. So for this week, I'm actually rather bullish on Swiss. Yeah, I can see that actually price actually broke 110, retested. Momentum kind of still going. Yeah. So for the coming week ahead, I'm going to be pretty bullish about Swiss. Let's see what setup it's going to give us. Now, I'm also pretty bullish about the Canadian index, CXY. Yeah. On saying that price is near $83, you can see that this is the previous high that price has reached. Yeah, so be very careful here. Yeah, so my advice to you is anybody who wants to trade CAD is look out for Monday's bar and see whether the momentum is going to continue or it's going to get rejected by 83. Yeah, if it's any sort of rejection, then probably I won't be trading CAD for the rest of the week. But if it actually moves up, break the level of 83, then yes, we have a currency to trade. British pound also bullish pair, but gotta be very careful. Yeah, not say very careful. I'm just gonna be a bit careful about this. Now, happy to see that price actually closed above 140, but you can see there is actually a gap. Okay, yeah, slightly gap. Then waiting for a proper retest of 140 before I will actually play any long position for the British currency. Yeah, so again, really similar situation as the CXY. You can see that price did actually break this level in the past, but it was whacked back down rather fast. Yeah, so while there's a case to be bullish, but we ought to be careful about it. Kiwi at the moment to me is really in the middle of nowhere. Doesn't really seem to me that it has any intention to move anywhere yet. So I'll be keeping Kiwi out. Aussie, this range has been playing for quite long already. So for the range players, I think they should be having a happy time. Yeah. Other than that, I got no updates for Aussie. Now Euro, I'm a bit skeptic about Euro at the moment. Yeah, I don't have a firm idea that is. Previously, I was actually buying to the idea that it might go up, but currently looking at the current price, you can see that what happens is this: lower high, same high. Yeah. So when I look at any currency that displays such tendency, I don't want to make a suggestion that it's actually going to break low, but I'll make a suggestion that it's better to keep up. Yeah. Until price really display where it wants to go, I prefer not to be in that particular currency. Now, yen, again, a bit on the bearish side. This is just a usual lower high. Yeah. So I'm just going to put in my bear position, any short position, and trade it all the way down to 90, which is not a lot of room, but with careful risk management, we still can get some pretty good pips out of it. And the last is DXY. Yeah. So as always, when price is near a horizontal level, no matter how I look at it, this is still a bearish trend, just that price is at a horizontal level of $90. Yeah, so coming Monday, I'm just going to keep a lookout whether price is going to break this level. If it does, I'm just going to load up position. So the two pairs that I'm going to be keeping a lookout for the coming week ahead, naturally the strong against the week will be dollar Swiss. I'm just waiting for price to break horizontal level, retest, and I'll be happy to jump in. The next pair would be CAD Yen. So you can see that CAD a bit ranging. This is the 4-hour chart, by the way. Yeah. So I'm either waiting for price to give me a very, very nice rejection candle, something like this, a long wick. I'll be putting 0.5%, or just wait for the usual break and retest of the resistance level, and I'll be happy trading it long. Yep. So that's all for me, Paul.
Cheers, cheers, Lloyd. Thank you very much for that. Now I'm going to bring up a chart. Thank you very much for that, Lloyd. Always it's great to have your company on these things. I do always love your analysis, and I do love the consistency of the returns from them. So well done, mate. Look, I'm going to talk a little bit now about. I'm going to share a chart, and I'm just going to make a case. And it's not a case that I'm going to tell you this is something that is absolutely the way the world's going to work. But what I am going to do is I'm going to make a case because it fascinates me. Now, you guys will be aware that we have Gordon Scott on the team now, and he's been talking about doomsday for US stock markets. And he makes the case, and I think it's a great case, that US institutions, if they own a product for more than 12 months, less than 12 months, they've got to pay capital gains tax. So therefore, quite often large pullbacks on markets come back after 12 months. But he doesn't say 12 months. Can someone help me out? He says 55 weeks, 56 weeks. It's not exactly 12 months. And I've been wondering why it's not exactly 12 months. I can see something in the comments box, or someone here will be telling me exactly what it is. 56 weeks. But that's fascinating. And the thing is that I really love the case. I really love this reason about tax. Makes complete sense to me. Then I hear 56 weeks instead of 52 weeks. And I think, well, that doesn't make a lot of sense to me, apart from maybe institutions don't buy at the bottom of stock markets. Maybe institutions buy small amounts at the bottom of stock markets, and there's something that they use to get in with more volume, and it's that point that it's 52 weeks after. Now, again, I'm not Gordon Scott, and I haven't done the hours of research or written a book on this, but what I did do is have a look at a couple of charts, and these charts made me really interested in this week here. So here is the bottom here. I just put this mark next to it so I could find it. Here's the bottom of the stock market in 2020. There it is there, right? 23rd of March. Now, what you'd expect people to do is to buy the first high or low. That's right there, right? But I don't think institutions would buy that. And they wouldn't buy that because they've got a lower high. And this could easily, are we sharing my screen? I can see a bit more chat coming in. Don't think so, Alexis. We'll wait and see, eh? So I don't think institutions would buy here. I don't think they would because they've got a lower high. But if you get to here, they've got a higher high and a higher low. And I think institutions would buy there. Now, if I'm right, if that's the point where institutions brought volume to the market, then we will see a sell in that stock market this week. Now, I've read the thing from Alexis telling me that it's paperwork. That's the delay. I'll be interested to see. But the thing that I found really interesting was if this is what they look for, and, you know, first high, first high low following, that makes sense to me as a trader. I don't think institutions will buy here because that's a lower high, and that could easily come down here and just do that, or pop, pop, pop down. Whereas here, uptrend's established, that's an area where it looks to me like somebody got pretty interested in buying, right? And that was the 21st of April. So if they've held that for 12 months, they're getting to that 12-month period of sell about now. That was the NASDAQ, S&P. Let's go back and have a look at the S&P. There's the low there, same sort of date, 24th of March, 23rd of March. There's that first higher low where we'd love to buy, and probably retail traders did. But I doubt institutions did, lower high. Here I get a higher high. Here I get a higher low. 22nd of April. So if they're waiting 12 months, if they got in here, and again, looks to me like someone bought. Now, don't get me wrong, someone bought in here as well, but I'm not sure there's institutions at volume buying in this area through here. So most institutions will have been at this thing 20 times. Where do they put the volume in? Well, if they put it in around here, they'll be looking to get rid of some of that next week. Now, what I did was I did a bit of a comparison. I thought, well, something sold this week. What sold this week, guys? Can anyone help me out? What sold this week? Can someone let me know in the chat? What's just sold? I can see a comment. I haven't read it yet, but I'm pretty sure it says cryptos, right? Crypto sold. So what I did was I had a look at a Bitcoin chart, and I scrolled back. And this is, you got to work really hard as a trader to come up with these scenarios. And I scrolled back, and what I got was, there's the low in the crypto market, and there's the first low, and it's off a lower high, and no one would have bought it. But there's a higher high, and there's a higher low. And that is the 16th of April. That's 1 week earlier than the S&P and the NASDAQ. And if that's the case, institutions may well have been coming in at this time and may well have been emptying out this last week. Interests me. I just was playing around with, I've been away for the weekend. I was looking at some charts before we got underway today, and I turned this up and I thought, interesting. Now, we have seen around the time of Gordon's talk, we've seen selling. You know, we've seen the Bitcoin thing. That is still a reasonably unstable looking market. But I wonder about these dates, and I wonder if the 2 week for paperwork is spot on the money, or whether it's really just, I mean, look, if you're going to try and convince me that institutions bought here, I'm not a buyer of that theory. I don't believe institutions bought here. Look, institutions aren't buying fib retracements. Institutions don't do that. Institutions are looking for something fundamental to drive them. And they may have taken small positions down here, just like they probably took small positions here and lost. They've got some small positions down here and built them. But I don't know that they would have been in seriously before this area here. Just a theory, just a thought, just a different view on the Gordon Scott stuff. And I'm going to have a quick chat with him about it. And Yellen announced taxes last week. Yeah, fair enough. We'll see how this week plays out. And look, again, I'm not saying to you that that I think that this case here is where they brought, and this week we're going to see US share markets, you know, drop 6% and be auto closed. All I'm telling you is I found the dates a bit interesting. If you go back and have a look at this, because that's where I'd buy. I'd buy here, but this is where I'd really buy. I'd take a little position down. I'm a bit different to a lot of guys. I probably will take a little position down here with a little bit of risk. I might get hit out. I might make it, might not. But here I'd be a little bit more interested. But here's where I'm really interested. We talk a lot about the first higher low, but it's still dangerous off a lower high. So interested me. Again, not saying that the US stock market's coming crashing down tomorrow. What I am saying is that the timing makes me interested and probably unlikely to be buying those products yet. I'll let them shake out a little bit this week before I start to get back into my positions on them that I did close out at some nice highs recently. Rightio, that is me on that. Another view, and I will drop it off to Gordon and have a bit of a chat about it at some stage. I might catch him tomorrow morning with a bit of luck. Let's get the technician's 2 cents worth.
G'day, buddy.
Hey, mate, how you doing?
Mate, I'm pretty fascinated by what you've just been through. Not just because of that analysis, but through the interesting fall of cryptos during the week and where that finishes and where it begins its next phase. I don't know.
Yeah, it's interesting, mate.
Looking forward to seeing it.
The US dollar drops 5% at some stage, and all the crypto guys say that fiat currencies are dead, and Bitcoin drops 50%, and they all tell us that Bitcoin's fine. I'm not sure you can say the US dollar's on 5% and US dollar's dead, and that Bitcoin can drop 50%. That's fine. I believe both of them are fine. In fact, this looks a lot to me like some professionals taking out some averages in the Bitcoin stuff. But we will pick it up.
Well, to me, it's a miracle that. To me, it's a miracle that the US dollar only dropped 5%, mate, frankly. We'll see where that finishes up. Indeed. All right.
Went up 50% during the week. I'll leave it with you, buddy.
Look, had I bought Bitcoin at $2, mate, I would have been a happy person. And I'm not going to say anything about Bitcoin because I'm out of that. I'm out of that space. It's not me. Anyway, what is me is this particular space, and I'm talking. I am sharing my screen. Yes, Euro Swissy at the moment.
Are you sharing your screen, mate? I'm sorry, I'm not picking it up. If you are,
yeah, I've got the blue circle of death. It's telling me I am screen sharing, but I'm not sure that's the case.
Guys, can you see Geoff's screen, please? Can you let us know? Mike, can you cut this out of the recording when you do this? Not yet. Mate, I'll screen share and take it back off you. And then, is that you now? I've got it. You grab it back, eh? Is Geoff gone? Can somebody let me know if Geoff's still in the room, please? I think we might have lost him.
Geoff is unmuted.
Geoff, you all right, buddy? What's happening here? Do we have Australian internet going on? Geoff is not there, frozen right now. Wow, look, I'd follow. I'm just going to message him and see if he's coming back because, look, the truth is, I don't mind giving the Australians a bit of a serve every now and again, but their internet is third world over there, and I don't know why it's so bad, but internet problems over there are not. It's been a lot better, to be fair. I would suggest that we think he's here, but he's probably really gone. Actually, we're going to do this. Let's have some fun, eh? While we wait for Geoff to come back, let's hear from the guys. Lloyd, are you still with us?
I'm here. What's up?
Mate, cryptocurrency retracement or finished?
Let's get it. I would say it's still retracing.
Ainslie? Alexis?
Still retracing.
So it's not finished, it's just retracing? This is not the start of the end?
I don't think so.
Yeah, I don't think so either, but it's one of those things where if it is the start of the end, people look at charts 10 years from now, people look at the charts of the last few days and go, it was pretty bloody obvious it was finishing. I don't think it is, but those charts will if it's in big trouble, these charts will definitely reflect that for us. I can hear everything. Geoff can hear everything. Okay, let me have a play and see what I can do, Geoff. Co-host Geoff, he's asked to unmute. You've got him as unmuted, right, Mai? We've got you as muted.
Yes. He's not in the room anymore.
We've now lost him. Let me see. Okay. Look, I would imagine that he'll be back reasonably quickly. Look, guys, we have got a big couple of weeks ahead of us. We'll talk a little bit about that stuff as well. Shukri, if you're around, retracement or the start of the end.
Hey, cryptos are like this, guys. You got to remember this. You know, the fear index and all this thing about liquidations. If you think it's the end, it's probably not because you're going to get liquidated. It's the end when everybody thinks it's the end and everybody shorts and then it goes up. Because I got liquidated. That was the first and last liquidation during a bear market by shorting it. That's all I can say.
Look, I'm just going to ask John now. Sorry, I'm dead. I don't think Geoff's going to come back. I'm going to. I'm just waiting to get his message. Look, I want to talk about a couple of things before we wind up today, guys and girls and everybody else. First of all, thanks for joining us for the show today. It's always great to have your company, and I thought it was really good of Julian to come along and do a couple of hours, no products, no pitching, just giving back to the community. I think it's amazing that guys are prepared to come and give us that kind of time. I do want to remind you guys, I was in a show just before, I was doing my Thursday night interview, probably with Lloyd, I think, from memory. And someone asked me about Gordon's Doomsday. And I said to them, look, it's great to have an opinion, but trust the charts. And I think there's a bit of the stuff. We have a lot of people in our organization. We get a lot of really good information, but it's really easy to get in front of yourselves. Trust the charts, guys. The charts will tell you what's coming. And, we are technical traders, and what we want to have a bias, and the COT stuff we do, the seasonal stuff we do, the fundamental stuff we do, the macro stuff we do, these can all give you a bias. But in the end, you don't trade the bias. The bias gives you a direction, and price action and the charts confirm. And I think at times, I felt with the Gordon stuff is that people were getting quite a long way in front of themselves about it coming. Sorry, Geoff can't get back, guys. Look, here's what I'm going to do. For the next hour or so, I will be cutting these shows up and sending them out as mini shows, which go into YouTube. And if Geoff is able to record his session, and then we will add it to and send it out. But we won't ask you guys all to hold around if he's unlucky to make it back in. So it's around 10:30 on Sunday night. It's been a big weekend away, so I'm keen to finish reasonably soon. I think Geoff at this stage, he can't get out of the webinar to get back in the webinar. We can't see him in the webinar to give him any powers. So there's not much we can do. I'm just going to make sure he's not over here. He's not. So there's not much we can do right now. Thanks, guys and girls. Enjoy your Sunday. Get an hour's analysis done later on today if you can. Get yourselves ready. It's going to be an interesting week. And I think what Alexa said about the week's so true, that we've got a couple of really fascinating weeks coming up. There might be weeks where we've got to keep our risk pretty low and just keep our heads down and wait for clarity. I'm not sure for me I've got clarity right now. The stuff that's been, in my view, if you'll excuse the expression, I was going to say really easy. You should never say really easy trading. But the stuff that's been really clear for me, Bitcoin's changed. It's been clear for me. The US stock exchange has changed. They've been clear for me. I'm not so clear right now where they're going. So I'm just going to keep my risk low and look for some opportunities and some value to try some small positions. If I can build some big positions, I think I was in that Bitcoin position for 5 or 6 months. I was in that S&P position for 5 or 6 months. I like to trade forex in and out because of the nature of the product, and I like to hold the inflation-based products more. So, if you can find a way into gold, it looks like a pretty good option for me this week. Take your time, find some good stuff. Trust the charts. Thanks to the team very much for their input today. As always, really appreciate it. Thanks you guys for joining us. Hope you enjoyed Julian's show beforehand, as well as this one. Remember, always stay calm and make good decisions. And if you do that, it will all work out for you. Cheers, Helen. Thanks, everybody. Have a wonderful weekend. See you guys. Cheers, everybody.